In this video, we are going to cover the Progress Claims module within CostrixIQ. So think of the Progress Claims module as a client cash flow module. Because every client has different payment terms, what we will be analyzing and reporting is based on the date of the progress claim to the client, and then that can be transferred and calculated into a cash flow forecast for the client based on their payment terms. So the progress claims module is a CostrixIQ Plus module. So it's an optional module that users and organizations can decide to take up in the subscription package. And the module is the orange module on the bottom of the tabs here. So let's have a quick look at this project just to understand the structure of it. We have a project that's roughly $3.3 million above the line. We've cost planned that project in our cost planner. We also have 8 different sectors. Some of those sectors are just covering cost. So we have 5 sectors where we're actually covering or capturing some kind of selling numbers to the client. And so we're now at a position late in the pre-contract phase where everything's generally fixed. We've fixed our contract sum, we're ready to lock it away. And as part of signing contractual documents, the client is asking for a cash flow forecast or a progress claims forecast. So in that instance, we will use one of the 2 tabs. We will either use the progress claims tab or the progress claims per sector tab. They operate the same way. One just has more functionality than the other. And so if we didn't want to report on individual sectors, if we just wanted to create a progress claims forecast based on the project as a whole with all sectors combined, we would use the progress claims tab. And in that tab, it consolidates all of the sectors into one view, and we would utilize that one view to forecast out our cash flow. If we wanted to provide the client with an extra level of analysis and we wanted to provide cash flow forecasts, not only on the total project, but also on the individual sectors, then we would use the progress claims per sector worksheet, which consolidates all the sectors together. But as opposed to entering in your progress claims against the total project, you would enter in your progress claims on individual sectors, and they will consolidate into a total project. So it was one or the other. Now, the way we create reports is once the data is entered, when we go to the reports tab, you will see down the bottom, there is a progress claims summary and progress claims detail report, and that links to the first tab. And then there is also a progress claims per sector summary, progress claims per sector details, which links to the second tab. And you'll notice with that second tab, not only are you able to print out reports for all sectors, you can also print out reports for individual sectors as well. So you do have that extra level of functionality if you wanted to report that way. So now let's jump into the progress claims tab and how we would set it up. So the system has been built to forecast out 24 different periods. You can customize your claim periods. So I may put in Jan 25, Feb 25, I'll put in 6 claim periods, March, April, May, and June. So we may have monthly claims, or we may have fortnightly claims, in which case you can change the date format. And now the date format is day, month, year. So you might go 1 January, 15 January, 1 February, 15 February. So you have a toggle between a day, month, year and a month, year claim period. In addition to the 24 claims, there is a previous claims section. Now, as a reminder, with CostrixIQ, we can run project scenarios where a portion of the works are secured and contracted and underway, while there is a remainder of the works that is still being quoted, priced in pre-construction or in sales. And so if we're creating a progress claim forecast, we may have already submitted some claims on prior scopes, which are still within the system because we're reporting as a whole as well as individual parts. So in that case, I could enter in those numbers under previous claims, and then I could forecast out what's remaining to be claimed. So the structure of the progress claim template or worksheet is we have our sections as the client has seen them. We have our selling price. We see our claimed total percentage, our claimed total in dollar figure. We have some data validation. These items are red because the claimed total does not match the cell. So any item that is red is just a warning sign to say the system's unreconciled. We have a toggle button where we have all of our sections showing, but if we're not using any of those sections, we can close that off and just look at the valid sections. And then for each period, we have a percent and a currency, whether it's a dollar, a pound, euro. In this instance, it's dollars. So we have a percentage and a dollar figure. And the way the system has been programmed is you can use either of those and it will auto-calculate the other scenario. So let's say we have raised a previous claim, a deposit claim or some kind of claim, and of that $244,000 we've raised already $100,000 in the past. We could simply come in, add the $100,000. It automatically says that's 40.83% of the package. And then we can start working our way forward, and we may say, okay, at the end of January, I'm going to add another 20% to this. I think my third-party professional services may be at 50% complete. I may be at 20% here, 30% here, and the user can go through and add a percent as to where they think they're going to be at the end of that claim period, and it automatically calculates the dollar figure. Now, subsequently, I could enter in a dollar figure under storage and racking 61,285. In this make-believe scenario, I may feel like I'm going to claim 100% of that at the end of the period. I could enter in 100%, or I could enter in 61,285, and it will reverse engineer the 100%. You'll also notice that the red fill has been removed because we are in a reconciled state. And so I can then go through and fill out other percentages, and it's telling me at the bottom the summary for claim 1, which would be end of January. So I'm just going to go through. I might put 10% here. So it's showing me I've claimed just under 3% of the contract value previously, another 22.88% at the end of claim 1. I'm just going to go and fill out the rest of the claims and come back and show you how that reports out. Okay, so I've moved through the claim schedule. I've now completed my previous claims, claim 1, claim 2, claim 3, claim 4, and claim 5. And I'm just about to forecast my final claim, which will be claim 6. And you can see some things are still outstanding. I can see my claim percentage total. So if we look at this, I'm at 90.83%. So when you're using a combination of dollars and or currency and percentage, there are potentially some small rounding issues. So if I was to add in 9.17%, you'll see that it is saying I'm 100% claimed, but I'm about $6.92 out. And so what you would do is you would remove $6.92 from that figure, which I will do now. And so by removing that figure, instead of using the percentage to reconcile, I'll reconcile it by the dollars. So I'll type in 22,450.50. You'll notice the percentage doesn't change because the rounding was at the third, fourth, or fifth decimal point, but we're now in reconciliation, 100% claim total, and also a 100% match on the sell price versus the claim total. And so on my third item, I can see I'm at 90%. So I can go claim 10%, 5%, 10%, 5%. And so I can work through this based on the percentages and very quickly forecast out my claim schedule. It's actually 15, 15, 5, 5, 5, 10, 10, 10, 10. So we are now all reconciled. I have my previous claim and my claims 1 to 6. And so you can see of the 3.376 million, I'm projecting 3.376 million. I'm showing the previously claimed figure of 100,000. And then I'm showing 772,000 for end of January, 970,000 for February, $500,000 for March, 434,000 for April, 280,000 for May, and 309,000 for June. Now, if we were to use the progress claims per sector tab, again, you can show only the used items. Instead of filling the percentages out on the total, as you can see at the top, I'm going to fill my percentages on a per sector basis. So I can do my fees, and just as a quick scenario, I can say 10%, 10%. And so you will see I've claimed $41,000 of the $415,000 on my fees. And if I scroll up, I can see that I've claimed the 41,000. It's 1.23% of that whole of that project value. And then if I was to add a claim period, and I said I was 20% and 10% on my prelims in that same claim period, I have an individual item, and then I can see how those items are consolidating in the all sectors automatically. So I'm going to go through and just project all of these individual sectors and show you how the per sector report works. Okay, so I've just worked the progress claim cash flow forecast for all the sectors. So you'll see my fees are now forecast for the 6 sectors. My prelims I've now forecast for the 6 sectors, for the 6 claims. Sector 3, which was level 1, I've now also claimed for the 6 sectors. This really works well. This module really works well for separable portions or staged works, because if you can put the portions or the stages in their own sector, the cash flow or progress claim schedule may be staggered. And this is an example of where we have sector 4 level 2. We actually don't commence the claim schedule until claims 5 and 6. In this make-believe scenario, the works are as staggered and we don't start until May, whereas we have sector 5 level 3, which starts projecting from January. So if you do have separable portions or staged works, and you do need to project the portions of work in a more accurate way than just bundling it up all together as a summary, you would use the progress claims per sector functionality, and you would then forecast per sector and you'd be able to stagger the claims. So once that's all staggered, you can see our all sectors is also fully populated. Everything's reconciled. We've now undertaken our cash flow progress claims forecast, and we now want to report that to the client. And so from here, we can move to our reports module. And as mentioned, we have either the progress claims or progress claims per sector options. We have a summary report and a details report for each version. So if we have used the first tab, we will use the first option, which is the project as a whole. If we've used the per sector functionality, we would print one of these reports here. And so let me now go ahead and produce these reports. I'm going to produce 1 and 2. I'll produce the progress claims reports together, and then I will produce the per sector reports, and I will explain and show how you get that extra level of breakdown with the per sector analysis. So we'll run these reports now. Okay, so our reports have now printed, and these are the progress claim reports. We have 2 versions, as stated. We have a summary version, and so with the summary version, as you can see, we have our previous claim, We then have claims 1 to 6. We have our periods. We have the percentage of that month. We have our currency figure, and we have our total. So that's just a nice summary of the forecasted claims per period, the percentage being claimed, and the value. And if you wanted to provide the extra level of detail, there is the detailed progress claim report, which is the same report, but now you can see the claim total and you can see those individual claims. So you can see how each claim is broken out within that. So that is the progress claim version. And then the way the per sector report works is, again, in this instance, we have a progress claims total project, and we have the detail behind the total project, so the two reconcile. So let me go back to the total project. Not only do we have the total project, we also have a summary of the fees, we have a summary of the prelims, we have a summary of level 1, we have a summary of level 2, and we have a summary of level 3, and we have all the detailed reports, if selected, that reflect those individual sectors. So it's very easy to give a client an overall cash flow forecast. And let's say cash is coming from different even CapEx budgets. You could, again, set your sectors up into those different budgets, and you can go, well, this is the cash flow for that bucket. This is the cash flow for that bucket, or separable portions, or staged works. And so this is part 2 of the cash flow module. It relates to CostrixIQ version release 5.01 and afterwards. So in the first portion of the video, we covered progress claims and progress claims per sector and the client progress claim reports that are produced out of the reporting metric. And prior to version 5.01, it was really a claim forecast module. As of version 5.01, the progress claims module has been updated to, in effect, be a full cash flow forecast for a business. So let me run through how we've updated the progress claims module from version 5.01. So in the first part of the video, we covered the progress claims dashboard and the progress claims per sector dashboard. And then we also showed in the reports module how you could print a claim invoice schedule, not a cash flow schedule, a claim invoice schedule to your clients. Now, in this latest release, in addition to progress claims, we have the addition of some extra dashboards called trade claims and cash flow. So in the progress claims dashboard, we could forecast our client cash flow based on our cost plan structure, our sections. Now, in order to create a full cash flow forecast, we need the opposite side of our client, or our upside. We need our downside cash flow from our suppliers and subcontractors. So trade claims operates in the same way functionally as progress claims, but it consolidates our cost side as opposed to our sell side. So our trade packages are loaded in as opposed to our sections. We have our cost as opposed to our sell, our claim total percent, our claim total as a currency, and then we have the same column structure as our progress claims. We can add in different claim dates, so we can have different claim dates for our downside cash flow forecast as opposed to our upside. So we may be claiming off the client at the end of the month. Trades may be claiming off us as of the 20th of the month. So we can have slightly different trade claim periods, or claim periods for progress claims and trade claims. And in addition, it's up to the user whether you want to forecast your trade claims as a job overall, or we have a trade claims per sector where we may want to do a forecast based on the sectors of the job. Maybe we have severable portions or the like, and so we want to actually do a trade claim based on individual elements as opposed to just doing it holistically. And so we have our trade claims and our trade claims per sector. Now, how does the system know what trade packages to bring into the cash flow forecast? Because although we may be tracking cost against different elements, there may actually not be a cash impact on the business. An example of this would be cost recovery. If a business is utilizing cost recovery, they're adding cost to a trade package, but they're not paying out on that trade package on the project per se. It may be to cover general overheads in the business on the P&L and so forth. So we don't really want to show a cash addition or subtraction based on cost recovery. A business may not want a cash flow forecast direct labor. They may be tracking cost on direct labor, but then they may decide to treat that as an overhead to the business. And so a business may only want to understand what are we paying in and out externally as opposed to what are we doing internally. And so how do we track what trade packages are incorporated into the trade claims modules? Well, that is done from the trade packages dashboard. So in our trade packages dashboard, admins will have access via their admin password to the back end of the system where we can add in our trade package descriptions, our codes, and any other information we need for integration with third-party systems. There is now an addition of a column called trade claim projection that is against each trade package. And this is where a user or an admin can decide to include or exclude a trade package from the projections. So as an example, our contribution to office overheads are currently excluded. So that trade package would not be included in the trade claims. If I was to come in and say, no, I want to include my contribution to office overheads, when I click on my trade claims, you will see that it's auto loading. When it auto loads and changes, the system will say it's been updated and it will advise you which trade packages have been excluded from the forecast. So in this instance, we've excluded submission costs and direct labor. But what you'll notice is if I zoom in, we now have the inclusion of that contribution to office overheads. And because it hasn't been forecasted previously, it's showing as red to say this is unreconciled. And if I had loaded straight into the trade claims per sector, if I click that trade claims per sector, it is also auto loading based on selection. So the way the system works is if there are no changes, it'll just click and you'll be ready to go. But if you click into trade claims or trade claims per sector and there's been a change in the system will auto load the tables for you. So just be patient while it's auto loading. And again, if something has been updated, it will say what tables have been updated. So this is updated the all sectors and sectors 1 to 5. And it's also reminding the user what are the trade packages that have been excluded in case you want to include any of those. And you'll see that contribution to office overheads has now been included in the individual sectors, as well as the all sectors area for the user to adjust. And if we were to come back into trade packages and say, no, actually, we want to exclude that. And then as an admin, I might close that area up. So that's set and forget. Now, when I go back to trade claims, you'll notice this contribution to office overheads has now been added to the excluded by settings. And if I was to click into the trade claims dashboard, because this is updating multiple tables, it takes a little bit longer to update. So just be patient with the system when that is occurring, but it will now remove the contribution to office overheads from all of the forecasts. So that is how an organization can decide to include or exclude certain trade packages or cost codes into their trade claims forecasting models. Once the system has been set up, the user would then, like the progress claims module, come in and enter their percentages based on into their claim periods, enter their percentages, and once we're all reconciled, the system will be all red. So in this instance, I forecast out my progress claims. I forecast out my trade claims. Now, I may have used the per sector module where I forecasted out my progress claims per sector, or I forecasted out my progress claims, my trade claims per sector. And once I've forecasted out my claims, we can then move to the cash flow module. And so now I'm working in the cash flow module itself. And let me break down the structure of the cash flow module. So in the top left, we have some variables that the user can adjust, because as opposed to claim dates, something that is quite variable in our industry is the payment terms, the retention periods, the release of retention, and how long a client will hold on to retention or how long we hold on to retention. So the system treats client claims as one big package, and it treats trade claims as one big package. So it's a forecasting module. So it aggregates all of those trade claims into periods, and then it applies the same assumptions to each period. So in this instance, we have progress claims. The first top section is progress claim payment terms in days, the progress claims retention percent, how much retention is released at the end of the project, and how many days is the retention held. And then we have the same four metrics based on the trade claims. The trade claim payment terms in days, the retention being withheld, the percentage of retention released, the end of the project, and how long we hold on to the retention. Next, we have a box for the modules. And the modules box is going to import which module did you want to forecast. So we remember we have our progress claims and trade claims, but we also have our progress claims per sector and our trade claims per sector. So if you've used the per sector modules, you would select progress claims per sector and trade claims per sector, and that will incorporate the data from those tabs. If you've just used the progress claims and trade claims modules, you would select those. And if you have used a combination, if you've used progress claims to the client but trade claims per sector, you can mix and match. So you can pick what modules do you want to bring in to the model. Now, there's some model assumptions, just some clarification. So payment terms are applied consistently per module. Retention models are applied uniformly across all claims and trades, including previous claims, and retention release dates based on final claim dates. So just a little assumption. Here we have a box that will highlight when the project becomes cash flow positive. And then to the right, what you will see is as we change the boxes that are selected or the modules that are selected, you'll see the data to the right changes. And so what that is doing, if I've got progress claims and trade claims, the top portion is bringing in what are my progress claim dates and what are my trade claim dates. And then based on the metrics that we can adjust per module, the system then turns the progress claim dates into progress payment dates and trade claim dates into trade payment dates. So it takes the claim period, the claim amount, and then it might withhold the correct retention to create a net amount. It will track the release of retention at a certain period. So these tables are auto updated based on the logic applied. And then in the middle of our cash flow dashboard, the table on the left is the aggregated analysis of our progress claim payment dates and our trade payment dates. So as opposed to looking at the data in separate boxes and trying to figure out which date comes first, which date comes second, what's our running total, the system takes the model, aggregates it into one table, and what you will see here are all the payment dates, whether they're client payment dates or trade payment dates. Client payment dates are positives, so you'll see the money is positive coming in. Trade payment dates are negative numbers, and what you'll see here is a running total. So now in this instance, we would have had some deposits. So the system is saying, as at running this cash flow forecast, we are already positive $24,000 based on client deposits and maybe trade deposits. And then our first payment is the 14th of February. It's a trade payment of $255,000. So we go negative $230,000 from a cash flow position. The 2nd of March, we have an incoming payment of $618,000. We become positive $387,000. And you'll notice that 2nd of March is the last time we become positive. We never go negative after the 2nd of March. And so the cash flow positive box is displaying the 2nd of March as the day we become cash flow positive. And then in the middle, we have the table visualized. So $0 is highlighted as a red line, and you will see the graph dip below and above that as we go across our claim dates. So it's very easy to visualize. Now, the beauty of this system is you can start adjusting the model. So for instance, if we had 30-day payment terms with the client, 14-day payment terms with our trades, we are cash flow positive on the 2nd of March. This is our model. Now, what if the client wanted to go negotiate 90-day payment terms? Instead of having to wait for this to be in a delivery system, while we're in pre-construction, while we're in cost planning, while we're negotiating contract terms, we can model what that looks like to see if it's acceptable to us. All we would need to do is simply change the 30 to 90. And the second I hit enter, the entire model has been updated. All of our tables to the right are updated. Our master table has been updated. Our graph has been updated. And you'll notice the 2nd of March has been pushed back to the 28th of June. So while we dip in and out of being cash flow positive across the project, we finally become cash flow positive on the 28th of June. And so it's very easy to identify the impact of that. If the client had asked for 6, and then if you go, well, 90 days isn't acceptable because one, we're not going to be cash flow positive until the end of June. We can also see the volume that we have to finance the job. We need to finance this job close to $500,000 before it starts getting into a better position. That might be unacceptable to the business. We can go, well, what if we compromise and propose a 60-day payment term? If I come in and change it to 60, that now brings our cash flow positive date from the end of June to the beginning of April. So I've just saved nearly 3 months. And we only have to finance the project up to about $330,000. We may review this with management and say, okay, this is an acceptable position. Maybe we go back with 60 days or 45 days. I can put 45 days in there to model it out. It comes forward further. And so you can adjust the retention. Client wants to hold 10% retention. That changes all of the payment dates. If 100% of the retention is released, so there is no retention payment date, because what you'll see here is the 15th of October, there's a payment from the client, and 2025, and then the 15th of October 2026, there's another payment. That second payment is the retention release at the end of the 1-year period. But if I was to change the retention release amount to 100%, you'll notice that the 15th of October 2026 has disappeared because there is no final retention payment. On the 15th of October, which is our final claim date, we will be getting our final claim paid plus the retention portion paid. And so that is, if we go over to the model under the client claim, you'll see that there's a net amount of $364. We're also going to be claiming $337,000 of retention. So our claim is $702. We have no retention released. So the system will manage retention release dates. I add in retention. The system understands that there's a portion of retention that's going to be held. How long is that going to be held? That's going to be held 365 days. So the system models that out. So that is how the cash flow module works. And then finally, we may want to export this information and send it to our finance team or management team to model. So there is a button here called Create Cash Flow Report. And what that will do is it will take the consolidated table and it will include it in a report to send to your finance team as follows. So the cash flow forecast has now been created. As you can see, it is an internal only report because it includes cost as well as sell. And what you can see here is all the claim periods, our amount and our running total. The days we're negative, when we become cash flow positive is clear. It's the end of the red period. And so this report can be issued to your finance team. They may decide to aggregate these reports and create a larger company-wide report. But this is the way we can export the data for the management team to review. So that is the enhancement of the system from a progress claim module to a full cash flow module where you can forecast progress claims and trade claims, adjust your modeling, understand your cash position throughout a project, and report that internally to your finance team. If you are interested in more information regarding the cash flow module, please feel free to reach out.